Good afternoon, ladies and gentlemen. We'll just allow all of those that are very rudely vacating the room to make their way out. Give us the benefit of another 5 or 10 seconds, and we can tee off. There's plenty of familiar faces. James, how are you? There's plenty of familiar faces in the room. For those of you who don't know me, I'm the Chief Executive of Atlantis. I've been with the company now for about the last 8 years, and have been responsible for a lot of the growth where we've taken the company from what was quite a nascent startup to now the largest marine power company in the world. For those of you not familiar with Atlantis, it's perhaps appropriate just to think about the divisions that sit inside our organisation as a way to explain exactly what it is and how we do it. So Atlantis is divided into two core divisions, being the turbine division. As the name would suggest, it's primarily involved with the development, fabrication and assembly of tidal turbine equipment, but also a lot of the equipment associated with power evacuation in the tidal space. So we also do subsea connection systems and we do subsea deployment systems, all of which we sell into our projects. As a separate division, we have power generation. It's ostensibly our project development arm. So we take a greenfield site, we take it through consenting, and then as Atlantis, we own that project. We start to syndicate down equity as we reach financial close in each of the various projects. And then we cross-pollinate, because ultimately the turbine division is then able to sell equipment into the project division. The genesis of the company, for those of you who are unaware, is in late 2007, early 2008, Atlantis acquired a Morgan Stanley company called Current Resources. Current Resources sat on the Morgan Stanley commodities desk, and it was looking at seabed as an undervalued asset. So seabed real estate really is the same as onshore real estate. If you find the right piece of real estate and it undergoes a zoning or a permitting or a consenting program, then all of a sudden that piece of real estate can become incredibly valuable. So Morgan Stanley at the time had accumulated seabed rights, development rights in different parts of the world in strategically important locations, but needed some form of technology in order to make that valuable. Atlantis at the time was a technology company focusing on developing tidal turbine systems, and it needed real estate with which to be able to obviously propagate its systems and be able to develop projects. So we elected to acquire that company. Morgan Stanley became an investor at that point in time, and have continued to partner and invest in the company ever since. It's still, by some stretch, the largest shareholder in the organisation. So that was effectively the genesis. The company's headquartered in Singapore, but its major operations are in the United Kingdom. But we have a very global portfolio, a development portfolio, and a global portfolio of equipment sales. To illustrate the validity of the model. Around about 6 years ago, when we first started working with the Morgan Stanley team and Current Resources, we looked at different parts of seabed that we thought together would become valuable. And at the time, we took an option on some seabed in the Pentland Firth up in the north of Scotland. It was for a very, very low number, less than £100,000. Our thesis was that in due course, this would become very valuable, especially as the Crown Estate, who actually owned the land, started to run a leasing program, and we saw more and more OEMs coming into our space. So we took both an option on the land, and we also took an option in the grid. If you fast forward to the back end of last year, if you've been following the company, that same piece of seabed real estate, unbroken in exactly the same state that it was valued at 51.5 million sterling, and we have the most options on seabed right the way around the world. The May Gen project, as the name would suggest, May as in the Castle of May or the late Queen Mother's estate, is up in the north of Scotland. Prince Charles is actually involved in the design and the sign-off of our substation, which has just started construction. The Crown is a significant investor in our projects. It is the largest project now under construction in the world. The company IPO'd at the beginning of last year, and at that point in time we were aspirant of seeking to reach financial close, but of course under the spectre of multiple political events, not least of which being the referendum. So that project, Phase 1A, is now financially closed and has just commenced construction. I'll take you through that in more detail and the terms and the way that we originated and did that project finance. But for the uninitiated, so tidal power, the easiest way to think about it is ostensibly they're underwater windmills. And a lot of the OEMs that have moved in this space that are turbine suppliers, the standard names you would expect, be it Siemens or Rolls, recently sold their business to Alstom or Kawasaki, Toshiba, IHI, Lockheed Martin. A lot of them have got pre-existing experience in two things: drivetrains. They're used to making power generation equipment, and a lot of them are in marine propulsion. So it's quite an easy thing for them to move across and start providing tidal turbine systems, which really lend heavily off both wind and, of course, the oil and gas market. So think about it as very much putting a wind turbine subsea, with the great advantage, though, that unlike other forms of renewables, tidal is entirely predictable, to the extent where, on a micro-locating basis, we can predict exactly what each turbine is generating for 20 years in advance, broken down to 15-minute increments at P99. So whilst we're not considered baseload by grid, by utilities, we're considered firm. We don't have the intermittency that is obviously associated with other comparable renewables that one always tends to throw up, be that wind or be that solar. So highly predictable, and of course, we're the net beneficiary of the anti-wind lobby, because you don't see tidal turbines and you don't hear tidal turbines. They're very, very small compared to an offshore wind or an onshore wind system as well, primarily because water is, of course, 800 times denser than air. So from that perspective, you get very high capacity factors, which translate into incredibly good project IRRs. This is the obligatory slide, which we always have to put up, which ostensibly says, hey, the market is massive. But there is a big difference between what we call economically exploitable resource and, of course, sort of net or gross resource. So there are three things really that you're looking for when you're developing tidal power projects. And remember, whilst we are a turbine manufacturer and supplier and sell that equipment to different utility developers around the world, at our core, we are a seabed real estate development company. And what we look for, ultimately, the resource is everywhere. So our key constraints typically are grid, typically it's proximity to the seabed, and proximity to load. And then we superimpose on that, looking at where there are appropriate feed-in tariffs and subsidies that sit in place to make these projects financially viable. We started working with Morgan Stanley a considerable period of time ago, overlaying all of those variables, and then we effectively isolated particular sites around the world that we wanted to focus on, at which point we are certainly the dominant player in all of those markets. So post-IPO, we set out to achieve a number of key goals. And if you're investing in Atlantis at the point of IPO, you're effectively hoping that the management team would be able to deliver financial close on the world's largest project that had never been done before. You were looking for DEC to come out with a solid commitment on the strike price with CFDs on the electricity market reform. You were hoping that Atlantis would become the first company in the world to actually get full offshore construction consents in Scottish territorial waters. So a lot of people don't realise that even in the offshore wind space, full consent to construct has not actually been given even in the offshore wind. In Scotland, we're talking about. And at that point in time, we set about, post-IPO, achieving all of those goals. It was announced to the market mid to late last year that we had achieved in principle financial close. We enjoyed a combination of debt and equity and, of course, some grant that came into that. But this is now the flagship project for the entire marine industry, not just in the United Kingdom, but certainly right the way across Europe. So, and I'll take you through the structure of the closing, but 51.3 million. Importantly, the value, now that all the debt is drawn, at the time we had about 50 CPs that we had to satisfy in order to get the debt flowing subsequent to achieving a soft close. All of those CPs have now been achieved. Debt has fully flown. The project is, phase 1A is now fully funded to the tune of a tick under 72 million. From that perspective, Atlantis still owns around about 86.5% of that project. Scottish Government, through the Scottish Investment Bank, owns the balance. So that sits now in Project Co. And of course, the company is set up as a typical developer, whereby we have a number of SPVs that sit underneath us in our Project Co, and we are able to raise money, debt and equity at that level and not at parent company level. Of course, very important making that transition now. One of the interesting things that happened, of course, though, is that Atlantis is selling turbines into that project. So not only did we close and then be able to bring that value onto our balance sheet, but at the same time, it started triggering our first equipment sales. So whilst Atlantis ended up putting around about 10 million cash into the deal to achieve financial close on the 51.3 million, immediately we triggered sales. So the first 5 million on the turbine sales agreements were triggered. A lot of our key overhead and staff, a lot of our project staff in Edinburgh were able to transition across to the project SPV. So not only did we start triggering significant sales across our equipment business, but also then we were able to lower the OPEX of the company. And so it's quite an interesting scenario. You are literally like anyone familiar with the early days of Gamesa as a business. You're greenfield developing your own site, you're selling your own equipment into it, you're maintaining majority control of those and the equity ownership, and it allows us to effectively have two bites of the cherry. We get a big kick on our balance sheet and the ability to syndicate down equity on one side inside the project, and on the other we're selling equipment. And that obviously is a model now that we're replicating around the world. So the Crown came through. We did become the first ever company to achieve a full construction licence. So the Magen project at 398 megawatts is by far and away the largest in the world. Not only do we have the first phases financed, but also we have full grid. So all the things that you typically hear from developers that are the biggest issue, whether it's construction consents or grid or of course finance, have all been satisfied. We're able to significantly reduce the cash burn of the company, which of course is important sitting at parent co. And with the various subsidies and whatnot that were allowed, we're able to reduce that burn now to around about 250,000 a month. So it's now at Topco very, very lean to be able to run that. Probably the most significant event for the company, though, is that DEC confirmed the strike price for tidal power in the UK. And of course, the great thing is that when you have the majority of the grid, you've certainly got the largest project, the only one that got all the way through consents, you get a significant, you would expect to get a significant amount of the allocation. So the 305 sterling allows us to deliver very positive IRR returns on the project. And importantly, the project started construction in late 2014. We started placing all the orders immediately after financial close. Longest lead items, of course, being the big substation side of the onshore works, and that is ABB. So very, very standard ABB package for all of the power conditioning equipment. And then this year, we've just started in January full construction on the site. And now, of course, if you come onto the website at any time, you'll be able to actually track every day. We have both cameramen as well as drones that fly across the site, and they're doing all of the documentation, the cataloguing as we commence construction. So we've got ABB on site building our substation, which is connecting to the grid. By the grace of God, you may be aware that the Bewley-Denny line, which is one of the largest interconnectors undertaken over the last 10 years in the UK, has just effectively terminated right near our site. So we get full grid connection, which takes all the power south. For a small company, it was an incredible feat in some respects to be able to pull off this full financial close. So there were a huge number of companies that were involved, a huge number of funders involved in the syndicate. But what we did, which was really important, is that we standardised all the contracts, so they were what's called FIDIC Yellow Book. And the reason we did that is that we took the much larger, more patient capital funders, pension funds, long-only PE funds, through this first phase so that they become the natural funders of the subsequent phases of the project as we continue to build out. So from that perspective, whilst it was very painful and a very long and protracted process, we successfully closed, albeit soft closed, in the morning of the referendum. And you'll note, for the first time ever, certainly to our knowledge, we enjoyed the Scottish Government, the UK Government, as well as the Crown Estate, all becoming investors inside our project. At which point, we still own 86.5% of that equity. So we structured two forms of debt. Some of it was very traditional, 7% coupon, 10-year term, right the way through to some production risk debt, whereby the providers are actually taking a percentage of the ROCs that we generate. And therefore, it limits the risk on the project itself, because we're only servicing the debt when the project is generating. The contract structure's effectively wrapped up into three large contracts. So you've got ABB onshore, the offshore turbine suppliers, which for us, we've selected two different turbines for this particular Magen project, which is Andritz and Lockheed Martin. And then you've got your offshore construction package, which has been awarded to James Fisher. So fully funded and commenced construction. The reason that we went for two turbines in the initial phase is purely risk mitigation, because we can. And from that perspective, you've got a series of very tangible milestones. And remember, this is just one project in our portfolio, but it's of obvious interest, given that it is the highest profile and certainly the largest flagship project in the UK. So construction's commenced. The first turbines go in at the back end of this year. We energise next year. And remember that at 5 ROCs, so the renewable obligation certificates you'll probably be aware of, immediately when we start spinning, we start generating. And when we start generating, of course, we're generating significant revenue. So the company not only makes money out of selling its equipment, but of course then we're taking a dividend out of the project. Of course, the project equity value continually builds. And we've also got a very strong consultancy business. So you may have been aware, late last year we announced our largest construction consulting engineering contract for the ETI, which is Shell, BP, Caterpillar, Eon and Rolls-Royce. And they employ our guys to work on different forms of foundation to continue to reduce the cost of tidal power. So multiple revenue streams coming across the entire company. But what's interesting, and the reason that we structure the way that we structure the turbine internally, you would give me a wind up? Oh, sorry. The way that we structure things internally is that on the turbine side, we become very, very attractive to an OEM seeking to come into a market. If you're a Siemens, if you're a Kawasaki, Toshiba, IHI supplying into a market, Maygen now going ahead represents as a standalone opportunity 1.2 billion worth of sales. Remember, this is solidly backed by government, and of course, divisionally, then you've got a lot of interest in that side of our company. But on the project side, the reason it's really interesting is that Atlantis is somewhere between sort of interesting, sexy growth and becoming boring yield code, because once you start generating, then you're just ticking over all day, every day on this highly predictable source of revenue stemming from power generated. And at full build, it throws off 160 million sterling a year. And so, of course, naturally, the long-term owners of these projects are much more like the pension fund trying to match their 25-year liabilities to a positive IRR. And whilst we can't give you an absolute and explicit example of what the Maygen economics would be, because legally we obviously don't want to be promoting forward-looking statements in any way, if we took the worst capacity factor, and tidal power should be getting more than 40, and if you look at Siemens installation in Ireland at the moment, it gets 60% capacity factor. But if we took the worst case scenario on 150 megs, which is the next build out we're putting together, you'll see that this project alone throws out 90 million. So if you do a very, very quick calculation, you'll work out that these are incredibly high IRR projects. And whilst you may say, well, this is interesting, but it might just be the UK with a high feed-in tariff, we released an announcement to the market late last year. The Canadian government in Nova Scotia has just awarded Atlantis and Lockheed, we're developing in Canada with them, 530 Canadian a megawatt hour. In India, we get 15 rupees a kilowatt hour. So we get an incredibly high feed-in tariff to stimulate a market, and we are working with government all around the world. So you may ask then, why is it that if you're a project developer, do you continue to be in technology? And once again, the answer is because we can. So we get to sell kit into our projects. Now, we're not wedded to it. We are happy to run competitive tenders, and we do. But because you have to post such large parent company guarantees, we didn't have the balance sheet, nor will we ever aspire to have the balance sheet to be able to do that. So Lockheed Martin is now the global technology partner for Atlantis. They roll out our turbines wherever we need them around the world. And it makes obvious sense because typically Lockheed are already wherever we need to be. So in summary, very, very easy, tangible milestones of development. There is a complete dislocation right now between the market cap of the company and the intrinsic value just inside the Maygen project. From our perspective, it'll be very, very well documented each month as we see construction come on, and we step one stage closer, obviously, to making the turbines energised. We continue to develop in China, where we're partnering with central Chinese government, selling equipment. Our Indian project is the largest project in Asia at 250 megawatts, which we're developing in the state of Gujarat. And we have options now on substantial quantums more of seabed in the UK, once again backed by government, given the success that we've had on the Maygen project. With that, I'm out of time. Thank you very much for your attention and your society.